Welcome to another edition of Imagine Your Future podcast. I'm Steve Hall, excited for this afternoon's conversation. We've got a really good lineup with one of ISG's distinguished analysts, Stanton Jones. Stanton spends a lot of his time really looking at the market, understanding both the outsourcing market, the broader cloud, software as a service, Gen AI, sort of all the cool technologies that are impacting the space right now. So Stanton's ready to join us. Stan, you want to introduce yourself?
Sure. Thanks, Steve. And thanks for having me on your podcast. So have been with ISG for over 2 decades now, if you can believe that. So I was one of the original TPIers, as you were, and have held many roles in the firm, was the CIO for a few years. I was in our consulting practice with you, reporting into you as we built out our cloud practice. And then a few years ago, moved into our research team, and I lead our IT and business services sector research.
No, and I think it's our research piece that I'm really interested in, Stanton. It's, I think it was 2 years ago that you launched the ISG Insights, and with the ISG Insights and the Index Insider that we have, it's such a brilliant way to get key data to, with our clients, I would say the whole industry. Why don't you talk a little bit about, what are some of the key trends that you saw this year, and how would you summarize sort of the managed services business this year?
Sure. So it's obviously been a super busy year, as you know well, with a very kind of murky macroeconomic situation, but also just an explosion of new technology, specifically around generative AI. Lots of big changes on the supply side, big changes on the pricing side. So lots of things moving all at once. I would say, probably the biggest thing that we've talked about this year, and the thing that we're getting the most inquiries on, is sort of this relationship between the really strong demand for outsourcing or managed services. That's typically what we call it on the quarterly call. But at the same time, this really strong downward pressure on discretionary spending, given the macroeconomic situation that we've talked about. So we've been spending a lot of time talking with our enterprise clients, with service providers, and with investors, as we just did yesterday, Steve, talking about sort of how one of those can be really strong, the managed services side, but at the same time, this discretionary spending pressure being really strong, which is pushing down demand for technology projects that maybe don't meet a specific budget threshold, whereas they would have in the past. Those are getting delayed. So to me, that's really the big story of the year so far, and we're almost done with the year. So I'm betting that will be the big story, is the really exceptionally strong growth of managed services this year, up 6%. At the same time, kind of the downward pressure on discretionary spending.
Yeah, I'm not quite sure it's going to knock OpenAI and ChatGPT off the table for the most interesting story of 2023, especially after all the drama in November. But you are absolutely right. For our market segment, it's such a great story. And if I'm not mistaken, I think you said we're going to be up 6% year over year on managed services, and almost 40 billion of ACV will be awarded. I mean, those are just record numbers. What do you think's driving that?
Yeah, it's a great point, Steve. It's up 6. And as you said, we're confident we're going to hit 40 billion of annual contract value for the first time ever in the history of the sector. And it really boils down to one thing, and that's applications. So ADM or AMS, whatever term you want to use, that's really what's driving the growth in the sector now. That's up over 25% year to date on an ACV basis. And I think what's super interesting here, and we actually talked about this a lot at our annual service provider event, and that you led in London, I led in Dallas, is really this epic shift that's happened in the industry over the past several years, where in the past, we were essentially an infrastructure-centric industry that was over 50% of all the ACV in the sector. And that has shifted over the past 3.5 years. And now over 60% of the ACV in the sector is around applications. So that's been a really big change. It's been super beneficial for some providers. It's been a really hard struggle and a big transformation for other providers. But that ultimately is what's driving growth this year in 2023 is applications.
Do you see that continuing for 2024, or do you see any sort of rebound on the infrastructure side that we should think about?
100% see it continuing in 2024. So that's really where we think that the majority of the growth will come from. We think we're going to continue to see really strong growth in BPO as well, but not all BPO, specifically in areas like industry specific or vertical BPO. Also areas like engineering. So as you know, Steve, we track the engineering sector within our BPO category. That actually was under some pressure this year, and we think that was primarily due to the pressure on discretionary spending. So if that macro situation improves next year, we think that engineering spending could pick back up as well. But yeah, I think applications is going to continue to be very strong. BPO was down this year, but it's down because it's getting compared to the best year ever for BPO, which was in 2022. This will likely, not there yet, but this will likely end up being the second best year ever for BPO. And on the infrastructure question, as we've talked about at length, Steve, their infrastructure, traditional infrastructure outsourcing. So we're talking about data center, network, storage, mid-range, mainframe, the components of the traditional data center continue to be, outsourcing of those services continues to be under pressure. That's down double digits year to date. That's a trend that's been happening for, over 2.5, almost 3 years now. That said, and I think there's something really interesting happening here, and we've been talking more and more about this, is, that could start to shift if the enterprise push around AI really takes off, because I think we're going to start to see some enterprises recognizing that potentially it's going to be incredibly cost prohibitive to train models in the cloud. So one of the things that we've been talking about is potentially this emergence of a cognitive infrastructure, which could potentially lead to more on-premises infrastructure spending potentially in 2020.
Stan, that sounds really great. I agree with you completely on the rise of apps, the industry-specific BPO, and even engineering. And I think as we've talked over the last several weeks, I do think that once the economy turns, we'll see the return, if you will, of discretionary spends in that area, especially on the product engineering side. I think more and more organizations are really moving to software-driven assets as they move forward, which means more and more software development, which to me sort of leads into a little bit about how do we think about the delivery models associated with it. Now, with so many of the clients that we support, we've seen this incredible rise of global capability centers, global engineering centers, captive, shared services, whatever the name we want to give it at any given time. And I think you and the team just completed a study on that, if I'm not mistaken. Any insights you can share?
Sure. So if I think through kind of when you asked about what's the biggest story of the year, I still think it's, this really strong resilience of managed services, but you're right, Gen AI is up there as well. I would probably have to put number 3 around global capability centers and the activity that we see happening in that space. And Steve, you and I have both been in this industry for a very long time. From my perspective, the activity in this space is really at an all-time high. I can't say I've seen it at this level before, but I think what's interesting is if you think about a dumbbell, that's kind of how I'm thinking about this right now. And the reason I use that analogy is that the demand to build or to grow a GCC is at an all-time high, but so is the demand to reduce the footprint or even monetize a GCC. Those are both just through the roof right now. And as we work with clients, of course, and as we look at the data, one of the really interesting things that we see is the reasons for that are actually quite similar. And really they boil down to cost and to talent. So in general, what we see here is that enterprises that are looking to expand or establish a GCC are doing it in order to reduce costs and or tap into talent that they can't find today. But then the companies that are looking to reduce the footprint or exit their GCC are doing it because they can't reduce costs and they can't find and retain talent. So it's a really interesting dynamic that's happening in the market right now. But to me, this is very consistent with all the key themes that we've seen throughout this year. It's really around cost optimization. Enterprises continue to be under tremendous pressure to reduce cost and then use those savings and pump those savings back into modernization and transformation initiatives. But at the same time, this is just an incredibly supply-constrained environment, and everyone, service providers and enterprises, are hunting for and figuring out ways to retain technology talent. So that's the reason I think that it looks like a dumbbell right now.
Yeah, no, I like your analogy, and I've always sort of used the scales of justice to sort of think through the GCCs, but I actually like yours better because it puts a lot more weight on the organization as they think about going to a GCC or even spinning it out. And it's a complex undertaking that we've seen. One of the challenges that I've seen with GCCs this year, though, and I think you summarized it well, is really this race to talent. And in the race to talent, it's becoming much harder to find the right talent at the right price point, with the right expertise, everything. I think Eastern Europe is getting more expensive. We're seeing Spain and Portugal more popular, but it doesn't really scale. India remains a very popular destination. Philippines remains popular. But what do you think more broadly about the sort of the global integration of talent that we see right now?
This is a super interesting topic. And I think one of the interesting things that's happening sort of at the nexus of talent and location is we're seeing a number of new firms emerge that, if you think sort of a spectrum, on one end of the spectrum, you would have staffing firms, and there's lots of large established staffing firms across the globe. And on the other end of the spectrum, you have managed services or outsourcing providers. There's something kind of emerging in the middle, and they're meeting demand for the area that is in most demand, and that's in applications. As we talked about, that's where a lot of the technology spending is happening today, is in modernization of applications and building net new cloud-based applications and integrations and APIs. So what's happening here is that some new firms are popping up to take advantage of that situation, using technology, obviously, to source and find the talent, but then sort of delivering that back to enterprises as a managed pod. Maybe think of it that way. So I think we're going to continue to see more and more of that. And what's interesting there is then you're starting to tap into pools of talent that maybe are underrepresented. So think maybe about Africa, for example, or Latin America. I mean, there is some unbelievable engineering talent in those locations, but a lot of times, just for various reasons, they're not able to tap into that talent. So I think that model, we're watching that closely. Now, of course, the staffing firms are continuing to grow. The managed services providers are continuing to grow. But I think it just shows the degree to which, as we talked about earlier around the challenge around GCCs, this is a supply-constrained environment. And those firms, whether it's enterprises or service providers that can find and attract the talent that they need to build, as you talked about, software and applications that delight customers, we think are set to succeed.
Yeah, I think you're absolutely right. There was a couple big reports that I saw this week that were really interesting. And when I connected a couple dots together, it really made it more interesting. The first report came out of Forbes, I believe, and it really talked about the number of enterprises that were really moving away from college degrees as being a mandatory hiring requirement. And I think the quote was 43 or 48% of the organizations that were surveyed have moved away from a degree, essentially, for core skills, even in corporate offices, finance, even software development and engineering, which I found really interesting. I coupled that with a report that I read this morning that just came out of Stanford on a survey that they did that laid out that the work from anywhere or work from home cycle is absolutely going to continue. And this whole belief that we're going to get everybody back into the office isn't really holding true. I think what we are is in this hybrid work environment that's solid. So if you take sort of the combination of you can work from anywhere, degrees are not as important because of all the learnings that we have. There's a lot that goes into somebody. So experience is just as important as a degree. I think we are going to be on the cusp of really opening up a global talent pool, which will absolutely help us on the demand side of the business as we think through lots of challenges. But even as we do this, we have this huge productivity engine that's going to drive, further and further productivity improvements across. And I would say that's generative AI. So I know, again, the team has just completed an amazing analysis of the state of generative AI. I think you analyzed a number of use cases. I can't remember, how many hundreds, but it does seem like we are really moving into generative AI at the enterprise level where we're starting to see a real impact. Kind of give me a sense of what you see there and a little bit of your crystal ball.
Sure. Of course, we can't leave this podcast without talking about generative AI. It's not only, of course, and I know, Steve, you and I love technology, and we talk about this a lot and are spending a lot of time with generative AI. I mean, it's just an amazing technology. But at the end of the day, yes, we are seeing a explosion of innovation specifically around use cases for generative AI. And I think that's the great news is, in some ways, this feels a little bit different than cloud did when you and I started the cloud practice however many years ago, where it was kind of like, we just need cloud. I think what's kind of cool about what's happening now is that generative AI seems to be kind of coalescing around use cases, and use cases that we can apply generative AI to solve business problems. So that, to me, is already a great first start versus the very sort of choppy first steps in cloud that we saw so many years ago. So if you kind of take that lens of looking at it through the lens of a use case, that's the way that we looked at the state of the market. Obviously still very new. This is incredibly new technology, as we all know, but it is moving really quickly. So if you look at some of the interesting use cases, there's lots of them. I think the one that I'm really honing in on now is around this idea of code generation. So if you think about the ability to develop code through a generative AI interface, and that can be through multiple LLMs. Doesn't have to just be OpenAI's LLM. And the reason I think that one's so interesting as it relates to our sector is because that's really where so much of this constrained supply side challenges is on applications and in software development. So if you think about the ability, for example, to say, we're going to put a bunch of mainframe COBOL code into a generative AI system and help understand what is this mainframe application even doing, because we can't find the COBOL programmers to help us interpret the code. And then for the ability to rewrite that code in something more modern, I think personally we're going to see a productivity explosion here very soon with around that kind of use case, around modernization of legacy technology. It's not going to be perfect. It's going to be very bumpy, but I think that's the real use case amongst many that we identified, where we're going to see a huge amount of early traction, but I think that's also going to have a really big impact on our sector. So if you think about it through the lens of when service providers start applying this to their ability to build and manage applications for their clients in the area in our sector that's growing fastest, as we talked about, that's growing over 25, ACVs up over 25% year to date, I think we're going to see another area where productivity is going to explode, and that is through service providers passing those productivity improvements, whether it's in the number of features released or the number of applications modernized, or on pricing on a rate card basis or on a bundle of applications basis or on a pod basis. We're going to see a lot of change there over the next 12 months, I believe.
Yeah, I think there's a lot of positive change that's going to be driven by that. From a human standpoint, just imagine being a young developer just coming in and knowing that you now have a set of tools that can make you so much more productive and integrated with the team. Your sense of accomplishment, your self-esteem, your ability to integrate with the team is just so improved so quickly. And I've just seen, witnessed that myself, but I've heard so many stories of people being able to use it. I think, there's always some negativism with it, the impact on the workforce, et cetera. Are we going to have massive layoffs? I think there's so many problems to solve. The more people and tools we have, help us analyze problems, help us develop software solutions around those problems is just a big benefit, as you've said. If you were to think about the impact on generative AI or the impact of generative AI on the outsourcing industry, just over the next 3 quarters, what would you have us think about? What should we really be considering?
Yeah, so if I were an enterprise buyer right now, a few of the questions that I would be asking, number one, are, obviously, as we just talked about, I think coming at this from a use case perspective, I think is important, not just saying, give me generative AI. That's not going to solve anything. So that's number one. So coming at it from a use case perspective. I think as you just talked about, if you look at this through the lens of applications, for example, I would encourage a client to think about this in terms of productivity around the ability to develop more features and develop those features and modernize and help me get rid of or reduce my technical debt faster. Personally, I would not be pushing a client to push their service provider for further reduction in productivity or in rates or the downstream impact of the productivity improvements that we think this will provide. And that's primarily because, from my perspective, the providers don't even know yet, right? So they're still working through what this technology can do. And so what I don't want to see happen is service providers sign up for really extreme commitments that then ultimately impact the enterprise buyer and the client and the service provider, and no one's happy at that point. So I'm thinking about this more around the lens of how can I improve my throughput of, especially around applications, how can I reduce my technical debt, which is really what's holding back so many technology organizations today is technology debt. That to me is a big angle that I would be taking over the next 2 to 3 quarters. And I think the same thing applies for BPO buyers, for example. So we've talked extensively over the past few weeks about the impact that this is going to have in CX and in contact center. In fact, AWS announced yesterday or this week at reInvent, Q and the degree to which that will be integrated into their call center product, helping to make agents more productive. Right. So if you think about those kinds of use cases that can help to solve immediate near-term challenges, help to improve productivity, but not necessarily using it as a hammer to drive down prices to the lowest possible price point, because I don't think either side will be happy.
Yeah, interesting, because I think there's going to be price pressure from so many different points. If I'm an enterprise client and I look at my revenue this year, 2023 has been a tough year. 2024 is likely to be flat, generally across manufacturing, BFS, et cetera. So if we continue to use metrics such as, IT spend as a percentage of revenue, I would suspect that the allocation of that IT spend is going to change because of Gen AI. Everybody's going to want Microsoft Copilot. We're going to have a different chipsets and GPUs. Some of those are going to be driven more at the edge, or as you said, the cognitive infrastructure. We're certainly going to have more SaaS solutions that have Gen AI embedded. I got to believe the price point is going to increase on those, whether it's Salesforce or ServiceNow or Adobe or the hundreds of products that are used at the enterprise level now. What's sort of your take on how we should think about the IT budget going into 2024 and the allocation of that?
Yeah, it's a great question, Steve. So I think the thing that is happening, and it's happening very quickly right before our very eyes, is the idea that generative AI and large language models are being integrated into enterprise applications. And we can see this happening with Microsoft, as you mentioned, with Copilot. But this is happening across IT service management. It's happening across HCM applications, analytics applications. As I mentioned earlier, AWS is integrating generative AI into just about every product they have across database, analytics, call center, developer tools, obviously their machine learning capabilities. So I think what's going to happen here is that software is going to get more expensive. And we can already see that happening in some cases. The software as a service and pure play software providers, right? They are spending billions to integrate this technology into their existing technology. So I think that is absolutely going to eat into IT budgets, into a portion of IT budgets that was not there just a year ago, because that's how fast this has happened. As to the longer term impact and what that could potentially squeeze out, I don't know yet. I haven't really thought that far down the road about it, but absolutely, I do think that software is going to get more expensive in 2024 because of the integration of generative AI into these applications.
Yeah, well, you and I were early adopters, but November 30th, 2022 is a day that I will never forget, quite frankly. And when I first really started seeing the capabilities in the launch, and then 3.5 and then 4, and then I think you were the one that walked me through 4.5 Turbo for the first time and allowing us to create our own GPTs. It's just amazing how quick it's going forward. And I think the adoption curve on this is going to continue to accelerate. Quite literally, it's bigger than the internet. It's bigger than anything that we've seen on the impact on enterprises, on individuals. It's the democratization of AI, which can be incredibly positive. I think you've heard me call it the Cambrian explosion of AI because of exactly what you said. We're seeing all these plugins adopted into SaaS or SaaS products, integrated completely into the enterprise, new solutions being created, and it's daily, and none of us can keep up with it right now. There's clearly a lot of great podcasts and everything else that are trying to do just that, so I'm excited. But let me give you a few minutes just as we sort of wrap up. What's on store for the Index Insider for you? Give us a sense of what you're thinking over the next couple months, and tell the audience a little bit about how brilliant your insider is.
Thanks, Steve. So yeah, this week we're actually writing about reInvent. So as we know that AWS had their annual event, and a huge number of those announcements were really around AI and generative AI. And as I mentioned earlier, the integration of AI into just about every part of their vast product set. And so part of that we wrote about this week is this potentially, obviously we're going to see these price increases, but I think what's really interesting here is the degree to which, Amazon was clearly a leader early, and obviously still are today, and sort of building this cloud ecosystem, and that sort of this vortex that pulls in ISVs and systems integrators and outsourcing providers. They're doing the same thing around generative AI and AI in general, but so is Microsoft and so is Google. So that's going to be a really interesting space to watch in 2024, is the degree to which the hyperscalers like AWS, Microsoft, and Google build out those AI capabilities versus the degree to which the systems integrators and ISVs choose to standardize or choose to pick a particular partner, and or whether they choose to go with all three. So that's going to be an really interesting space that we're going to watch next year. Obviously, the impact that has, and we didn't really spend a lot of time talking about cloud here, just as a refresher, cloud bookings growth has been down all year. In fact, it's been negative over the past 3 quarters. That's the first time we've ever seen that. And just to be clear, we're not talking about revenue growth. That's still double digits if you look at the big 3, but we're talking about bookings. So a reflection of revenue growth, meaning that revenue growth is slowing. Much of that because of the discretionary spending pressure that we talked about, but some of that also because of the fact that many enterprises sign these large framework agreements post-pandemic and have frankly really struggled to fulfill those agreements, mainly because we can't modernize applications fast enough. So that's another angle that we're going to be watching in 2024, because it has a big downstream impact on service providers. And the ADM work that we talked about is, can these generative AI applications and services and integrations help to accelerate application modernization for enterprises and for the service providers that they rely on to help get these applications modernized? If it can, and more applications land on AWS or Google or Microsoft, that will likely start to re-accelerate bookings growth, and then obviously as a reflection on downstream revenue. So that's a big area we're going to watch in 2024. A couple more areas that we've got our eye on, and we didn't really talk a whole lot here, is about sort of the whole supply side. We did talk a little bit around talent, but if you look at what's happening post-pandemic, the model that the industry has really been built on is around hiring hundreds of thousands of freshers, right? That's really been what the industry has been built on. over the past several quarters, because of the macroeconomic situation, hiring has slowed down substantially. Attrition actually stabilized and has picked back up a bit. So if you think about kind of just a giant pool of, technology talent that is available to be deployed, it's actually quite tight right now, meaning there's not a lot of slack in the system. So for example, if the economy does get a lot better next year, I'm not saying it will, if it does, I think we could actually go back and see some of what we saw in those crazy days post-pandemic, which is service providers going and tapping back into the subcontractor market a lot in order to find the talent they need. We still don't really know if we're going to go back to the way things were around that gigantic fresher hiring model. Don't really know yet, because I think it does kind of just feel like that supply side equation is still a little bit to be determined. The economy, it's just sort of a little unclear. And then finally, I would just say on the managed services side, Stephen, I know you and I have talked about this a lot, and we're finalizing our forecast as we speak that we'll talk about on the January index call. But, given the state of the economy, we think we're going to continue to see a lot of focus on cost optimization from enterprises. And I think that bodes well for managed services providers.
Very good. Got a lot teed up for the year. How can people listen to you or read what you're doing?
Sure. If you
could be on my podcast again.
Sure. If you just go to the ISG website at isg-one.com, you can sign up for the weekly Index Insider. It's a really quick read. Generally, you can read it in 3 minutes or less. I don't know how long it takes you, Steve, but it's a quick read. There's always a chart of the week, and would love for your listeners to be able to subscribe to that. And as I always say, I'd love your feedback as well. Questions, feedback on what we're covering it and how we're covering it, questions around the data. We do consistently get feedback that this is really sort of the only source of its kind in the market that really kind of takes this big picture view of the IT and business services sector across many of the areas that we've talked about today: demand, pricing, talent, location. So yeah, we think it is the best thing out there in terms of being able to stay on top of the sector. Obviously a little bit biased, but really encourage your readers to sign up and appreciate you highlighting it.
Great. Thank you, Stanton. And I'd love to have you back on the podcast again as well. So thank you, everybody. Thank you for lending us your ears again.